Well, good morning and happy Monday to you. This is James Hecker, Mortgage Advisor, bringing you the weekly mortgage recap and forecast. And so, first of all, just wanted to share with you that I got a used, new to me, telescope yesterday. And boy, I am really enjoying it. It's a 9.25-inch aperture Schmidt-Cassegrain from Celestron, and that's right in the middle, halfway between the 4-inch Celestron that I have, the Newtonian reflector, and the 14-inch Meade Schmidt-Cassegrain. And so that just means it's easier to handle, easier to get set up, and still gives a great view of things in the sky. So last night was my first night using it. I started out with Saturn, looked at Jupiter, checked out the constellation Pleiades, which is also known as Seven Sisters, or in Japanese, Subaru. And then went on to take a look at Mars, and also the moon when it came up was just spectacular. So I love astronomy, and if you have any interest in astronomy, by all means give me a shout out. I'd love to talk to you about it and share that interest. So what's going on in mortgages? Well, last week was really interesting because we had some inflation numbers come out on Thursday that were the market accepted as positive and caused the largest single-day drop in mortgage interest rates since 2009. And so why was that? Well, the inflation numbers came out actually month over month a little bit higher, 0.3%, but that was less than the 0.6% that was anticipated. And the market reacted positively to that. And again, we had the biggest rate drop in one day since 2009. And so last week I had talked about the Fed's raising the discount rate, which was expected and happened. But what the Feds are doing is they're watching inflation. As inflation slows down, they may slow their increase to the federal discount rate. And that's exactly what happened on Thursday. So the market, again, reacted positively to that. The markets today on Monday are still positive, but just kind of pulling back a little bit because one great economic report does not necessarily make a trend. And so we're going to continue to watch that. Now, tomorrow there's another inflation report coming out. We'll see how that goes. And as I had started to say 2 weeks ago, I talked about the Fed's pivoting. They increased the discount rate 0.75% as was expected, but the talk is that they may slow down that progression of rising the discount rate to maybe the next time they meet in December or February, maybe they'll only raise the rate 0.5%. They're going to continue to raise rates for a while yet until inflation really is in check. And as Powell had said, the Fed chairman Jerome Powell had said, this is going to cause some economic pain, quite possibly a recession, which some people think we're already experiencing. But we're going to see those interest rates continue to increase until the Feds feel that it's really under control. And but they may slow the rate of that progression based on slower inflationary reports. So we'll see. So if you have any questions about this or mortgage rates, how they might affect you and your home, whether it's a refinance, you want to get cash out, buy something else, or whether you're looking to buy a piece of property. With the rates that they did come down last week, that just means that there's a little bit of a benefit towards affordability and lower monthly payments for the same purchase price. By all means, give me a call at 661-714-2145. And if you want to talk about astronomy, well, I'm always up for that conversation. Feel free to give me a call as well. And if there's anybody that you know that should have a conversation about owning a home, I'm here for you. 661-714-2145. Thanks for your time, and we'll see you next week.